Hello and welcome to the Stock Market Performance Playlist. Major indices saw a strong rebound, particularly driven by the technology sector. Underlying concerns related to trade tensions, inflation, and geopolitical risks continue to cast a shadow. Market performance and key drivers. The overarching theme for the week was a significant rebound in equity markets, signaling a buy-the-dip mentality after recent losses. The U.S. markets, especially the tech-heavy Nasdaq, led the charge, with the S&P 500 approaching all-time highs. This impressive recovery was primarily fueled by strong Q2 earnings season. Corporate earnings have largely exceeded expectations, particularly within the technology and communication services sectors. This fundamental strength has provided a solid foundation for investor confidence. Companies like Apple, Nintendo, and Sony reported robust results, with AI-driven growth being a recurring theme for many tech giants. Magnificent 7 inches rally. The Magnificent 7 tech stocks continue to demonstrate their market dominance, leading the broader rally. Their strong performance, often linked to ongoing AI trends and strategic initiatives. For example, Apple's pledge to boost U.S. manufacturing significantly contributed to index gains. Hopes for lower interest rates, despite some fluctuations in expectations. The prospect of future interest rate cuts by central banks, particularly the U.S. Federal Reserve, remains a key driver for equities. Despite the bullish sentiment, several significant headwinds and uncertainties persist. Escalating trade tensions. U.S. President Donald Trump's executive order imposing an additional 25% import tariff on Indian goods, specifically targeting India's continued purchase of Russian oil, sent ripples through global markets. This action raises total U.S. duties on certain Indian exports to 50%, among the steepest ever. While some tariff exemptions for major tech names like Taiwan Semiconductor and Samsung provided a temporary reprieve, the broader risk of escalating trade wars and their impact on global supply chains remains a primary concern. Companies heavily exposed to higher tariffs, such as certain retailers and manufacturers, saw their shares decline. Inflationary pressures. While global inflation is generally expected to fall, U.S. inflation is predicted to stay above target. The S&P Global U.S. PMI data hinted at rising inflation going into the second half of 2025, partly due to tariff developments. This creates a challenging environment for monetary policy, as central banks try to balance disinflation efforts with potential economic slowdowns. Geopolitical risks. The World Economic Forum highlights that geopolitical risks, including state-based armed conflicts, for example, Ukraine, Israel, Gaza, and the proliferation of misinformation, are at new highs. The ongoing uncertainty stemming from these global events makes it challenging for investors to price risks accurately. Slowing global growth projections. The World Bank and OECD have both issued downgraded global growth forecasts for 2025, primarily due to rising trade barriers and heightened policy uncertainty. Trends to watch. Technology's continued dominance. The reliance on the technology sector for market gains is a clear trend. Investors are betting on AI-driven growth and innovation to continue driving returns, even as other sectors struggle with consumer confidence and economic headwinds. Divergent central bank policies. While some central banks, like the Reserve Bank of Australia, are contemplating rate cuts, others, particularly the U.S. Fed, are maintaining a cautious wait-and-see approach amidst inflation concerns. This divergence in monetary policy could lead to further currency fluctuations and impact capital flows. Vulnerability to external shocks. Despite the market's current resilience, the underlying vulnerabilities to fresh headlines related to tariffs, economic data, and geopolitical developments remain. Shift in investor sentiment. After a period of subdued reactions to earnings beats, this week saw a clear shift towards a more positive market sentiment. However, analysts caution that this sentiment remains vulnerable to unexpected developments, highlighting the need for continued vigilance. In conclusion, the global stock market ending August 8, 2025, reflects a battle between strong corporate earnings and the enduring appeal of technology stocks on one hand, and a complex web of escalating trade tensions, inflationary pressures, and persistent geopolitical risks on the other. While the immediate outlook appears positive due to the recent rebound in expectations of easing monetary policy, the broader economic landscape suggests that investors will need to navigate a period of continued uncertainty and potential volatility. Don't forget to subscribe, like, and comment.
Maybe someday it'll all work out. Until then,